Hi, I'm Kyle Floyd, CEO and founder of VOXR Royalty Corp. We're a specialist royalty company that focuses on generating the highest returns on invested capital in the sector. We look for third-party royalties or non-operating interests all over the world. We have the second largest holding of hard rock mining royalties in Australia, and we've been one of the fastest growing businesses in the industry.
Kyle, good to see you, man.
Good to see you.
We have spoken so many times, but never met. So nice to see you in person, and not a bad backdrop there either. Right, we're going to help. We'll get an update from you, of course, but we're going to also help some people maybe not exposed themselves to royalties as well. I can explain a few things along the way. First of all, you're at the conference. You're here meeting who? What do you want out of it? What are you talking about?
I mean, kind of the mix of everyone. It's great business development opportunities, a lot of investors, a lot of all the support industries that go around mining. And so the Denver Gold Forum does a fantastic job in conference. Clearly the venue's spectacular.
Yeah.
So we get a little bit of everything out of it.
Okay. And you, unlike me, you only drove down. You drove here in a matter of hours. Slightly jealous of that.
It's my favorite 2 weeks of the year being based in Denver.
I bet. Well, okay, let's kind of kick off and get an update from you. What have you been doing since we last saw you? The name of the game is revenue. How's that going?
Well, look, last year we did $9.7 million in top line, the royalty revenue receipts. And this year we get the guidance for $11 to $13 million in revenue.
Right.
And look, things are tracking really well. We had an announcement about a month ago where we received first revenue from a royalty, frankly, far before we expected it. And that crystallized a 15x return on our invested capital into that transaction. And so we're tracking really well. The business is really strong. Clearly, some volatility in the marketplace, but I have to say the strength of the Vox business has never been better.
Right. But isn't this the time where you guys should be shining? You got a lot of cash-stranded companies looking for alternative financing, royalties, streaming, etc. is bundled in with that. So are there lots more inbounds in moments like this?
There are origination financing, what we call finding royalties and streams with the operator of the mine and then financing them in return for that stream royalty. That's not our core business.
Right.
It certainly is for a lot of the industry, and I think we're seeing more of those types of transactions.
Right.
Our focus is finding, for the audience that's new to Vox, our focus is on finding already existing royalty contracts all around the world where we have an edge in sourcing those opportunities and ultimately procuring those royalties into our portfolio.
Right, okay.
But absolutely, you're seeing that demand profile change as the equity markets have been challenged.
So these third-party royalties, so let's get into the weeds of what that means. We've talked in the past, you've got this big database of a lot of these royalties, so you've been putting together over the past, several years. Now, how do you go about sort of chasing those people up? Why? In fact, sometimes they don't even know they've got them from memory. Is that right?
Yeah. So the process for Vox is a little different. What we're ultimately seeking to accomplish for our shareholders is a multiple on invested capital. So one of the challenges with the royalty sector is it can be so competitive that absolute rates of return have been driven down over time in the royalty sector. That's probably healthy in some respects, but our business is fundamentally different. The royalty database that you speak of allows us to find royalties that others don't know about in many cases. And we have a team of deal sourcing agents that work for us all around the world. So we found royalties with doctors in West Africa. We found royalties with hearing aid technology companies, automotive parts businesses, telecom companies, family estates, you name it. And so that's the interest that we look to procure all over. And since 2019, we've done more of those specific third-party royalty acquisitions than anybody else in the world. And so, but the uniqueness of our process is that it's a team of mining engineers and geologists doing the hard work on the front lines to understand and evaluate assets and look for developments from data sets that no one else is looking at to try and triangulate value and try and triangulate where these royalties are and who owns them, and then get in touch with them and ultimately ideally bring them into our portfolio at great value for our shareholders.
Right. So that's about the most efficient use of your capital. Where do you deploy that in capital? And I've asked this question of lots of CEOs this week and some royalties as well. It's been a difficult market for a while now. Have you had to rethink your business model? Have you had to rethink your strategy for deploying capital?
It's a great question. The reality for Vox is, given the success of the majors, the Royal Golds, the Franco-Nevadas, the Wheaton Precious Metals, it was no surprise, and you have to go back, I started this company more than a decade ago now. it's no surprise to me that the wave of royalty companies has been really robust, and there's been new entrants or a few new entrants every single year. We planned on this competition, long story short, and we created a business that could have a durable competitive advantage, even in the face of a very competitive industry. And so, our unique database, our unique process, and our discipline around that, and the investments that we've made over the better part of a decade to enhance those allows us to continue finding great value in a sector that value is a struggle for a lot of companies right now.
Right. And how are you going to be driving value for your shareholders? Because the market's been hit pretty hard in terms of the risk-off equity environment right now. M&A seems to be on everyone's lips at the moment. You want to make yourself defensible. You haven't quite reached the heights that you think you're going to be capable of getting to. So again, how do you play this market?
Look, I think we're seeing a bifurcation in a number of different respects in the royalty industry. You are seeing some of our peers where their portfolios are also growing well, and you're seeing peers that probably overpaid for growth in a lot of respects, facing some challenges. I think when you look at the facts of Vox, we've generated the highest return on invested capital over the last half dozen years. We've put about $50 million into royalty purchases. That's yielding 11 to 13 million this year, is another year of a 25% current return on long duration cash flow. And so our objective is to keep doing exactly what we've been doing. I don't think we have to do anything different. Are there certainly ways that we can improve? Absolutely. And maybe, our market facing presence being one of those, because I do think we're fundamentally so disconnected from our real intrinsic value, and we haven't closed that gap yet. And I think that is a frustration for us and our board and our shareholders. Is we want to realize the full value of Vox as soon as we possibly can for our shareholders. But I think what does that is continued discipline and execution over the coming months, quarters, and years.
Right. And given that there's not too many third-party royalty companies out there, and most of kind of conventional streaming royalty companies out there, does that make you more defensible? Does it make you less attractive? I mean, how do you view that?
I guess, beauty is in the eye of the beholder. I think our business model is the best in the industry. We're clearly fundamentally biased, but I think our returns and our track record is validating that, and we'll continue to validate that. We had a really interesting transaction that we announced last week where we found immense value. And I think that was one of the questions on Vox is, were we lucky, or do we truly have a systematic advantage? And I think we're proving, we know we have a systematic advantage, and I think we're proving that we have that outwardly to the market, and that transaction was a big part of it. And we'll continue to execute on that. One of the other questions we get is, okay, again, is that a one-trick pony? Was that just something that you're able to do very infrequently, or can you continue to execute that with, a pretty good cycle? And I think the answer to that we will prove again is yes, we have an ability to find value in a sector that is highly competitive, where returns, broadly speaking, for royalty companies have been driven down because of that competition. And I think we're an outlier in that respect. And I think that's very, that's validated at this stage.
Right. So I guess, like I say, the name of the game is revenue. For you need access to capital, and ideally cheap as possible capital. And you need to buy effectively, efficiently, because you can give away a lot of the upside if you don't get it right at the beginning of the deal. So if I'm looking at, say, that deal from last week, how do you go about evaluating that and say, this is a good use of money? And by the way, investors, this is why you should believe me. And by the way, lenders and credit facility guys, this is why you should believe me. What does that process look like?
Well, look, we started looking at this portfolio of royalties more than 7 years ago. We've wanted to buy it every single day for the last 7 years, and we finally were in position to move on it. And ultimately, as we put in the press release, we've acquired 50,000 gold equivalent ounces. Where the resources stand now, that doesn't count further exploration upside that is present in the two kind of key cornerstone assets in this portfolio, Red Hill, and then also Horseshoe Lights. And so 50,000 gold equivalent ounces, let's say high level round numbers, gold's at $2,000 an ounce. On an undiscounted basis, that's $100 million in value. These are very, very good projects, particularly this Red Hill gold asset that has a 1.2 million ounce resource is, I think, the most interesting royalty we've ever had a chance to acquire in our portfolio.
Right. Okay. And I guess I want to come, obviously you've got places to be here, but so thanks for coming and seeing us. But are we saying that because the third-party royalty business, we're saying that's not necessarily a seasonal thing in the sense that or a cyclical thing, I should say. It's not a cyclical thing in the sense we need to wait for a downturn. We can get after these things any time. Is that how you view this?
Exactly.
Right. Okay.
Exactly. That's exactly what
So it's very, very different from what the other royalty companies at the moment who are, are out there looking to find good companies who are just cash constrained at the moment. So that's why I'm kind of intrigued by the model. Can your model sit with conventional models? Can you or would you consider adapting, take advantage of these kind of cycles and the downturns in markets like this?
Look, I think when you evaluate returns across the spectrum, certainly in many cases the majors have done exceedingly well in these types of downward cycles for equity valuations. I think the junior companies have a harder time being competitive because scale matters, liquidity matters, the quality of the operators matters immensely. And you can't compete, in my opinion, heads up with the majors. They have a lower cost of capital, infrastructure that's been developed over the better part of 20, 30 years in many cases. And I think that's a very challenging business proposition to outline to your investors that you're going to heads up compete with them. Our business model allows us to navigate outside of the competitive waters, find royalties that others either don't know about or aren't in front of. And ultimately, you talked about how do we interact with the cycles. We're providing liquidity or asset diversification to an eclectic group of owners of royalties where it's not usually their core asset. And so we're able to offer something, liquidity or asset diversification, that's needed throughout the cycle. And so it really tends to produce a consistency with our deal flow that's not as dependent on cycles, which I think is a really good element of our business.
Okay. So what does the near-term future hold for you? How do you play this market? Do you change anything about what you're doing, or is it just a steady, creative march forward? How are you coming at it?
I mean, I think the answer, and it's more of the same for Vox. When we came public 3.5 years ago, we were kind of reminiscing about the COVID times where we went public. Look, there was a lot of unknowns about what we would deliver as a business. I think, we made some big statements of our business was different. We had unique competitive advantages. We had unique systems and processes that allowed us to consistently find and generate excess value for our shareholders. And we're seeing those returns in a compounding fashion now within the portfolio. I don't believe the market's giving us anywhere near the valuation or the credit that we have already existing in the portfolio, let alone any goodwill for our ability to continue on a durable basis creating value for shareholders.
Right.
So it's more of the same. It's more, I think we've proven ourselves to be very disciplined with what we acquire, and we utilize the advantages that we've spent more than a decade building.
Good to see you, man. I'm glad it's going well as well.
Thank you.
Well done.
Appreciate it.